Hi traders, I want to show you an example of an inverse head and shoulders that's set up on the Australian US dollar on the 60-minute chart. Remember, the first thing we want to do is identify higher time frame key areas of support or resistance before we start looking for patterns. Okay, so in this example you can see we've been in a nice up move and our price is starting to retrace, and if we have a look at this swing here, we want to see if we can identify any key areas of support and resistance. So we take our swing up from this very low up to this high. See, price is starting to retrace. Okay, and you take your horizontal line and just drop it down. Have a look at this 38 area. Have a look at this nice area of resistance across here. We have resistance, support, breaks through, retests, resistance, 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 comes back. See the close above, retests it as support, and now we get the swing retest. Okay, so we're at a key area of support on the higher time frame, and these levels can be marked off way in advance. Okay, way in advance, so you can have alerts put on your computer, and obviously this is a daily chart. It's taking quite a while to get to that zone. So when price gets into that region, you want to start looking for potential patterns on the smaller time frames. Now this pattern set up on the hourly chart, and I'll just zoom this up for you guys. So see how prices drop. We're in a nice downtrend. Okay, and remember, the head and shoulders, the inverse head and shoulders, is a reversal pattern, so you're always going to find it at or after a big down move or up move. Okay, at the end of a trend really. So having a look at this, you can see price drives down, we then rally, and then we drive deeper into that key area on the daily chart. Okay, you can see we actually had a retest, or just about retesting on this area here. You see how we have support, resistance, support. Okay, have a look at this area right here. We've got this dealing level on the left. You see this this low. So price drops, rallies, drives deeper, picking up more orders. Have a look at the actual lows here. Remember, we spoke about order flow and order accumulation. You have a low, another low, another low. Okay, we have these sort of three drives down. Okay, then price rallies, comes up towards these highs. Now, in terms of trading these patterns, I will say this. Okay, if price stays below this low or below this high and then pulls back, I will still look to take the trade. Okay, and again, it may not be as high probability, but I find they still work pretty well. But ideal situation is price rallying and taking out a high. Okay, taking out the actual swing high point. But as I said, I will still look to take a trade if it stays below that low, or in this case the high, sorry. But just understand that it is slightly lower probability. Okay, so price moves up here, comes up and tests the highs, come to the bodies here, and now it starts to retrace. So if we have a look at this area here, okay, we want to look at that left equals right shoulder. Also have a look at this block. You see this area right here? This is very important. This can really help you reduce your risk on these bigger patterns if you want to. You see this block right over here, the last bearish candle right there, last bearish candle before price starts to move up like that. You see how we can use that as a reference point with this pattern. Just this slightly. Okay, right there is, we have an order block with this left shoulder. Okay, possibly equaling right. Also add your fibs in, so from the low up to the high, just see where you are. See the 50 area is just below that. Okay, I personally like to use the dealing points over the fibs, but it's always nice to just add it in as a confidence. Now, in terms of stop loss, with these bigger patterns, you can put your stop below the low. Okay, or if you're more aggressive, you can put your stop. You see this swing here, you can put it below this block here. Okay, now price may spike you down, come into this deeper block, and then rally. Okay, we just don't know. So personally, I like to just start the trade with a stop below the low. In terms of targets, let's just have a look at this. Go to your next time frame up. We're obviously in a downtrend. Okay, we've got low highs, lower lows. That's very clear. Have a look at these last blocks over here. Okay, you see price and these higher time frame areas are absolute key. You see how price breaks, comes back, retests that last bullish candle there, price breaks down. Okay, so watch this area right over here. Okay, this last bullish block before price takes a leg down, that is an absolute key area. Also, you see on the left hand side with these lows, you could definitely look at that as a target as well. Okay, so we got that area 434 as well as that block up there. Okay, so for under 10 pips, I'm not going to be overly aggressive here. If we get fooled at this order, we look for a pop up into this block up here. I'll be happy with that outcome. So going to our platform now, if we go to pending order, put a buy limit in, okay, and we want an order in at 1.0370. Let's go 76. I want to add 2 pips above the high plus the spread. So we're looking at 79. Okay, and we'll put a stop loss. As I said, stop below the low here. It's going to be a bit on the heavy side in terms of the risk reward, but that's where I'm comfortable putting it. If you want to be more aggressive, you can definitely put it above this block here, or a Fibonacci level. But we do have this area down here where price could quite easily spike into. Okay, so I'm going to go about 40 pips or so. 41, 42, 43, 44, 45, 46. So 46 pips. It's going to be a bit on the heavy side, but as I said, that's where I'm comfortable putting it to start the trade. And this area up here, okay, that's that 4-hour level. I definitely want to be looking at that area in terms of taking profits. Okay, we're against a big downtrend here, so you want to definitely understand the market environment. So 430. Let's go 32, so a couple pips below that base. Okay, so we just step this forward now. Okay, so there's your spike down. You see left equals right, and this block, let's just have a look at this on a smaller time frame. Okay, so as I said, there's nothing wrong with putting your stop below here. It's going to definitely improve your risk reward on the trade. You can obviously have price spike low into this block. So let's just step this forward and see how this starts panning out. So we've got this area in here. Okay, that's the first level we want to see cleared. If we can clear above that area, I'll be quite keen to see if price can hold above. I'll be quite keen to maybe reduce some risk on the trade. So there's the release we've popped up. You see how we're running through these highs here. Okay, so we can definitely get some risk out of the trade. I want to put a stop just above this high now. Oh, sorry, this low. What is that area? It's around 367. Okay, so we've reduced the risk now on the trade up to 367, below this swing low point. Remember, our target is up towards that 4-hour area. Let's have a look at the hourly chart. Still got to clear through. Haven't really closed much above this high. Okay, so obviously want to watch that. And then we've got this area here as well. So just by reducing your risk on the trade from below here to up here, we start increasing our average risk reward. Okay, so we don't have a complete fixed risk reward. We have a average risk reward. So you can see risk is now 12 pips for a total of like 52, 53 pips. Okay, so far nicer risk reward than what we initially started with. I'll just follow this through. Hidden resistance coming back a little bit. Okay, so there's a spike up into that level. We have a look at our account. Made 53 pips on the trade. Okay, we didn't initially start with a good risk reward, but when we reduced the risk, you can see the average risk reward looks much better. And let's just have a look at this area on the hourly and 4 hour chart. Okay, big spike up. Remember, we're in a big downtrend. You don't want to be overly aggressive with this. When you start getting into these order block areas on the 4 hour chart, I'm just going to step this forward and show you what you can happen here. Okay, see our price comes up, testing this area here, big rejection. Okay, so just be very, very cautious. See, price comes right down again, tests an area. Let's show you the hourly quickly. Comes back, taps that order again. Okay, and then we get a nice release back up. So nice little trade there. That was an inverse head and shoulders on the Australian US dollar 1 hour chart.